Hey everyone, welcome to episode 6 of the Bootcamp. Today we're going to be going over actually how to take our first trade. So we're going to go over a trade I took today actually with the team, show kind of how I took it, why I took it, and how you could take the same things. And I'm going to explain it using the concepts that we've learned for these 5 videos, because I know you guys have probably been waiting. We've learned all these things. How do we actually apply them? How are we going to make money? And I want to make sure you guys disconnect your minds from the money side of trading, but we're all here for that, right? So looking at this chart right here, I'm going to draw out these 2 bullish for value gaps. So as I've explained before, when we have a gap between the low of this candle and the high of this candle, low of this one, high of this one, I'm just drawing both of them here. This becomes just one big gap, the 2 combined. When they both are inversed, 2 big large candles here, this becomes an inverse for value gap. Like I said, what I do is I enter on inverse for value gaps. So you can put your stop loss above, like I said, and I kind of explained how the inverse for value gap is probably, in my opinion, the best way to know when order flow is being inversed, because fair value gaps are the most principal definition of order flow. We have big bullish momentum. When we have bullish momentum, we have both low resistance conditions and high bullish volume in the market. And then swiftly, what happens? Boom, bearish candle, we inverse it. And it ends up working in my favor and I make money. The problem here is that there's no context behind this. So we need to kind of reverse engineer this trade and explain why is this actually a good entry. So the first step to actually taking a trade is always going to be top-down analysis. Top-down analysis is when we zoom out, look at the 4-hour daily time frame, and we look at the higher time frames. And we want to understand, what is the higher time frame telling us? What is the overall narrative in the market? Yesterday, I showed a trade entry that you potentially could have taken on the hourly time frame, but that's the hourly time frame. And we don't want to be holding trades for days, potentially. So we see what the hourly time frame's doing, and then we zoom in, and then we zoom in, and then we zoom in, and we connect everything. And I'm going to kind of show you how you do it, because it does get a little complicated sometimes. So right here on the 4-hour, what am I looking for today when I wake up? So we're at UTC -5 right here, which is New York time. Personally, I am PST. You're whatever, just adjust your time here so it makes sense to you. But New York time market open is at 9:30, and I will wake up at 8:30, which is to trade the pre-market session. The pre-market session, which we call the New York kill zone, opens at 8:30 EST and goes to 11 EST. That is my trading window. I do not take trades before it. I do not take trades after it. So what do I do when I hop on at 8:30 EST? If I go to bar replay mode, what you can do in TradingView is go to this replay mode right here. If you have, I think, the premium version, and then you can go into bar replay mode, and I will go to essentially my trading window here. So pretty much what I saw is if I zoom out to the daily here, the daily is usually the first time frame that I look at, because each bar is a day. It's not too zoomed out, it's not too zoomed in. It's really the right time frame to start on. The weekly is, to me, way far too zoomed out. I mean, if I'm taking an entry on the 1-minute time frame, do I really need to look at the weekly? Some people would argue yes. I personally think no. It's personal preference. But we're going to start with the daily. The step 1 really is to look for fair value gaps and look for reactions. So what are we reacting from? So if we look to the left here, we have a big bearish fair value gap right here. And as we can see, the market never managed to close above it. None of these candles ended up closing above this gap, meaning that the market's respecting it. Now we do see wicks above, but always these bodies are closing back underneath. Now, what is the confirmation for us to keep going lower? Well, bullish order flow. What bullish order flow is being respected? Well, we have a bullish daily fair value gap, nice and big. It's not small and insignificant. It's a big gap, and we have a huge candle just going straight through it like it's not even there. That is a very bearish signal. Now you can read my PDF, link down below for that. I also have a new website that I launched. It has my link to my PDF, my Discord, and well, this YouTube course as well. So please go check that out if you want to see. In that PDF, I go over a little more about what's called an order block, which is when we get a sequence of bullish candles that get closed below. So pretty much you can think about it this way. We have a bullish candle right here, bullish candle. What happens when we get a big bearish candle closing below the opening price right there, the opening price of that bullish candle? That is called an order block, denoted with OB minus, because bearish, minus for bearish, plus for bullish. You can think about it this way. Buyers entered the market here at this opening price, and we push the market up. When we break back through that opening price, it's showing us that buyers that were here are no longer present in this area, and sellers are stronger. That's the best way to think about it. So once I see this big candle down, my thought process going bearish, okay? We also have resting lows below. So at the time we had this resting low, low here, and you notice that none of these lows took each other out. These are good targets, and these haven't even hit yet, but I have called in my Discord community, which is free, by the way. It's not some course. I'm not about selling courses currently. It's free. You can just watch me live trade. I talk about what I do, and there's no catch. It's absolutely no catch. It's literally just free. As we can see, like I said before, resting lows, I've pretty much called out. I'm expecting these to get taken, especially the ones that are closest. So what do? Well, I zoom in more. So now I'm bearish, and we're around here in the market. We have all these lows now to target, and as we can see, once we get this order block, the this OB. We come up, we're kind of, once again, wicks are doing the damage, bodies are telling the story. Wicks are coming up into it, and then we're rejecting back down. So this is the 6 a.m. candle. I'm pretty much just expecting to be bearish for all of these reasons. We zoom in even more. So now we're on the 15-minute time frame. So if we go to 8:30, we have all these resting lows down here. This line here, this black line, which I will draw in red to just denote it's an area we're expecting resistance. It's that order block, it's that opening price, which we disrespected. Once we break below that, we're expecting that to be held as some kind of resistance, right? We want to see the market reject from both this green box here. If we zoom back out, was on the daily, this daily bullish for value gap, that was inversed. So we leave that, and when we zoom in, we're also expecting this to hold bearish. In this case, the market doesn't actually trade all the way up into it. We reject earlier, but if we did trade up here, we'd expect to see some resistance. And then this gray box here, just to make everything clear, in the background, that was the gap on the daily time frame, which we went into, did not close above, and then came back down. We'll delete that for simplicity, but we do understand we are rejecting from that area. So now that we have everything in place, all I'm really waiting for on the 15-minute time frame, right? We're zooming in, is I'm waiting for highs to be swept, because what's resting above highs? Stop losses. What do banks need to fill their orders? They need stop losses or take profits. They just need retail traders like us to sell our position either in profit or in a loss, usually in a loss though, because these banks are smart, to fill their short orders so we can push the market lower down to the lows that we're expecting to hit based on current order flow. So I'm just waiting for highs to be swept, and I'm waiting for reactions. So on the 15-minute, which is a very good time frame to look for intermediate draws on liquidity, what I mean by that is, we're trading the 1, 2, 3, 4 minute time frame. So the 15 minutes kind of, like I said, a good intermediate time frame to look for reactions. 4-hour daily, it's a little too high time frame. We're not going to get a lot of entries, but 15 minutes excellent. I draw my 15-minute highs here. Now it's not a strict rule. If I see, some good, in this case, we did have equal highs here on the 5-minute right here, a high here. They're completely equal, as you can see. So 100%, I want to see equal highs. Remember, more stop losses, double the stop losses. I want to see this 100% taken out before we see the move down, right? Because the market is going to manipulate people before it does the actual move, because orders need to be filled. And also, it'd be nice if we could get a tap of this red line again. What's this red line represent? Remember, it's that order block. So now I know exactly what I want to happen. So I zoom in, and now I'm on the 1 minute. And that's what's crazy, is that people think, well, how do you connect the daily to the 1 minute? It's not that hard. You start the daily, 4-hour, 1-hour, 15-minute, however many more you need to be sure, and then you're here. That only took a few minutes to get our bias straight, but we're short bias. All the time frames are lining up. All we want to see is just these highs get swept, and then we're going to wait for an IFEG on the 1 minute, because that's how we enter the market, because that's when bullish order flow is disrespected. So boom, we sweep the equal highs right here, and as we can see here, we did get an entry. You might be thinking, oh, this is an IFEG. Yes, but it's very small and insignificant. We have a little fair value gap here, which after sweeping this, we rejected and did get a little fair value gap get inversed, but this is too small. I think we can use our eyes and understand that this is too small to use, but here we had a big move up. So if we go up onto the higher time frame here, we see a very clean 3-minute gap right here, which got inversed. And we also tapped the red line, like I said. So it's just 1, 2, 3 candles, boom, obvious fair value gap, boom, we get the close below right there. Your stop loss goes a little above the inversion, and then you target lower. Well, what happens? In this case here, this trade is actually good enough to the nearest low. On the 3-minute time frame here, to the nearest low, which is right here, this trade does work. And this is a pre-market trade. Expect pre-market trades to not run forever, because at 9:30 EST, we get the most volume, and what volume usually wants to do is manipulate people out of the market. So if you're in a trade and open hits, expect the trade to maybe not run anymore, because more manipulation is going to want to occur. But this trade worked beautifully. I did, in fact, stay out of this trade just for experience reasons, so I missed out on this, but it's no problem. There's more opportunities. So now I'm going to go down to the 30-second here, which is the lowest time frame I personally use. It's my rule of thumb not to use the 15-second to enter unless it's extremely good of a setup. I stick to the 30-second and above. It's just a personal rule. It's not anything you have to follow. And so now, what's happened now? I'm still bearish, right? If we zoom back out, we still have all of these lows that I want the market to come take out. We haven't taken them out yet. The stop losses are still resting. So any short position is still valid, because we have so much more lower to go. Just because we took out a low here doesn't mean we have to start looking for longs all of a sudden. The higher time frame is telling us that we want to go lower. So I'm still looking for shorts. So what do we see? 9:30 a.m. boom, we see an instant rip, and then, now this is manipulation. What happens? We have a high right here which gets swept, and we have a lot of resting highs almost in a bit of a trend line here. This is a lar as I explained, especially right here, very much trend line like. The market takes out all those highs because of the stop losses. We tap the red line once again, that order block, and then what happens? We have two nice and obvious big gap which instantly get inverted. first. So anyone who went long based on this momentum has been stopped out. Anyone with stop losses above these highs, of course, got stopped out. And we have our drawn liquidity, which just means where we're expecting the market to head, is below. So everything's really lined up. So boom, I entered short right on this close. I'll show a proof of that right here. I took this with the team today. These are some of the gains of my students that took the trade right here. And yeah, so we entered right on this close. And what's beautiful about this trade is we actually had a really excellent target. So I've explained what new week opening gaps are. So here we have the Friday to Sunday gap. Now, if we go to the close of this candle, which for a bearish candle is the bottom, to the open of this candle, and I extend this out, this is a unfilled because this low never actually tapped into it. So there's resting orders here and below this low. So it's kind of like equal lows, except it's with a new week opening gap. So we use this new week opening gap as our target, which is unfilled, which makes it even better because the orders are still resting as our target. And it lines up with a nice 1 to 1.2 risk to reward. And this trade worked out very quickly. So we just connected the daily time frame to the 4 hour, to the 1 hour, to the 15, 5, 30 second, and we took a trade because everything lined up. And usually when everything lines up perfectly, trades end up running a little more. So like I said, my higher time frame draws on liquidity were these lows. So for example, this low right here looks really, really far when you're zoomed in, but when you have the higher time frame connected to the lower time frame, you can start to catch really, really big moves like this. And as we can see, the market just absolutely tanks to this low. We were definitely in the time of the market when the market was hunting this liquidity. If we actually zoom out, we went for even more liquidity here, I think. Yeah, so we ended up taking out the second low right there. So that's almost a 1 to 10 RR in this trade. Now, full transparency, I was out at this new week opening gap because for me, my trading strategy, I have a pretty high win rate, and I just target 1 to 1, 1 to 1.5 risk to reward because that's all I need. But in theory, you could target much more given that you've connected all the time frames. I'm telling you right now, you guys, there's no holy grail in trading, but if there were one, it would be top-down analysis. If you can successfully perform top-down analysis every single day you wake up in the market, you trade from 8:30 to 11 a.m. EST. That is the kill zone. If you trade outside of the kill zone, your win rate's gonna drop. So you just have to set those rules for yourself. Another thing to note here is I'm just gonna go to the web here. Forex Factory. Forex Factory is your friend, okay? You're gonna wanna open Forex Factory every day that you wake up, and pretty much for just every day, it's gonna tell you what news there are for the day. You're looking for these red folders, and you're looking at the time. Make sure you're adjusted to your time zone. So if you see news coming out, you want to wait for that news to come out because the market's going to react to it. So you take a trade after the news comes out. So what are you going to do when you wake up? If you want to be a successful trader, you're going to wait for news. You're going to trade 8 till 11. What else are you going to do? You're not going to overtrade. You're going to take 1 or 2 trades, be done for the day, take your profits, or just take the loss. Be okay with losses, right? It's about mentality. It's about being okay with these things. I'm teaching you guys the technicals here. The mentality is gonna have to be up to you. However, the last video of the series will be purely mental. It'll just be kind of me talking to you about what I learned and what mental mistakes you potentially can avoid. But yeah, so technically wise, that's the first actual trade. We've connected all the concepts that we've learned, kind of put them into one little trade and explain to you how me and my students made some money today. So thank you very much for watching, you guys. I'll catch you in the next video. Goodbye.